Hi, and welcome back to the Business Career College video series. In this video, we're going to look at critical illness insurance. Which is a relatively new product to the Canadian market. Critical illness insurance is designed to provide a lump sum benefit, and it pays this benefit based on diagnosis and survival of a covered condition. So we're looking at diagnosis, and there are very specific definitions in critical illness policies. So, for example, if we're looking to define a heart attack, the policy wording won't just say heart attack, it will say elevated troponin levels, for example. And you don't have to worry about what troponin is unless you happen to be the doctor trying to do the diagnosis. Okay, and then we're also going to look for survival, and in most cases we're looking for 30 days of survival after diagnosis. And the reason we're looking for this is because if you have somebody who, let's say, has a heart attack and is dead a week later, that's not a critical illness problem then, that's a life insurance problem. They wouldn't have the set of costs associated with somebody who has become sick. They would have the set of costs associated, or their beneficiaries would have the set of costs associated with somebody who's died prematurely. So this is not designed to pay a benefit in the event of premature death. That's what life insurance is for. This is designed to pay this lump sum benefit, which you can actually use for anything at all. What it's really designed to do is when you have somebody who has suffered a critical illness, to give them some financial freedom. So we would use this possibly to pay for medical expenses. And with certain critical illnesses, you can have extravagant medical expenses. You might have the requirement to travel to the United States, or you might have the requirement to have experimental treatments. It can get quite expensive. You might have time off, and not just time off for you. That is, the sick person might have time off, but it's very common in these circumstances to have the family also take time off. So the idea here is we put some cash in this person's hands, and that should reduce the stress associated with getting sick. It can even enhance your chances of recovery. So this amount, this lump sum, it's going to be paid, as we're quite accustomed to with benefits of this nature. It's going to be paid on a tax-free basis. Okay, so that tax-free lump sum is put into your hands based on, as said, diagnosis and survival. Now, diagnosis of what? Well, with a basic policy, with a basic critical illness insurance policy, we're looking at one of the 4 dread conditions. The 4 dread conditions covered under every individual CI policy sold in Canada would be cancer, stroke, heart attack, and coronary artery bypass graft. Now, that's not all that could be covered. You can actually get a policy, and it's probably more common to see this today, that covers comprehensive conditions, where we'd have a comprehensive list. And this comprehensive list would include all kinds of stuff on it. You'll have typically about 20 other conditions, sometimes a little bit more, and this would include things like blindness, or Alzheimer's, or if you become comatose, or you suffer burns to a substantial portion of your body, or you have an organ failure, such as a kidney failure. Diseases like ALS or Lou Gehrig's disease, and lots of others. But it would have to be something that's covered in your comprehensive list. So, for example, somebody who develops lupus and has a policy that doesn't specifically mention lupus would not receive a benefit. And typically, not a lot of exclusions with CI policies, but we typically do exclude anything that's self-inflicted. Again, you would have to actually see that wording in the policy, or we'll also sometimes exclude something that's related to drug and alcohol treatment. Now, these policies are structured in a similar manner to life insurance policies. That is, you can have term or permanent CI. Permanent CI is more frequently sold today. You have to watch, it's a fairly expensive product. It's more expensive than life insurance. And the reason for that is it's far more likely to claim. The frequency of claims on CI policies is far greater than the frequency of claims on long-term care policies, on life insurance policies. And we do have some riders available, lots of riders again here. It's common to see this policy sold with a waiver of premium built right into it. It's very common, actually, a very popular product today, to see critical illness insurance with a return of premium. So we tack in return of premium, and this is often as much as 100% after 20 years of paying premiums. So there's a couple fairly attractive riders. One of the big challenges we see with long-term care insurance is at the time of underwriting. The same thing that makes this policy so very attractive is the thing that makes it difficult to purchase. And that is, if you have somebody who has a family history or themselves has a prior history of some condition, underwriting is going to be a challenge at best, and it's very common for somebody who has two parents who were sick with the same types of conditions at relatively young ages to get declined. You'll see more declines with critical illness insurance than with any other product. So the same person who thinks, hey, critical illness insurance would be great for me, I saw the consequences firsthand when my parents got sick, well, that person is going to have a tough time acquiring critical illness insurance. So there are some solutions to that difficult underwriting. Some of the solutions that we might consider here include CI for kids. So when we have a child and parents want to buy CI for that child, underwriting is much easier. You typically won't sell a huge policy on a child, but it's an easy way to get through underwriting. And there are even a couple of companies that have specific provisions in their policies adding up to 10 other conditions that are specific for kids. Another solution here, there are some guaranteed issue CI policies out there today. And these guaranteed issue CI policies are quite attractive. You have to watch, though. They may not have guaranteed premiums. We're quite used to CI with guaranteed premiums. Or another alternative here, we know that group insurance typically has little or no underwriting for the individual members, and you can see CI sold through group plans today. So quite a few ways to get around this difficulty in underwriting. So critical illness insurance, a fairly popular product today, and we have to recognize, though, that it's not life insurance. It's not designed to fill life insurance need, and it's not disability insurance. So you would still want life insurance to cover off the risks associated with premature death, and disability insurance would be necessary if you have a critical illness that ends up causing a very long-term disability. For exam purposes, really what you're going to have to recognize some of the basic stuff here. What would be a covered condition? You might have to recognize where there's a need for critical illness insurance. That is the kind of person who might think critical illness insurance is more important than life or disability insurance. Honestly, for the life license qualification program, that's not a very common exam answer. Generally, we look at life insurance and disability insurance as our needs before we look at critical illness insurance. Although there are people who might not be able to get disability insurance for a variety of reasons, or maybe you have a business owner, for example, who would continue working through pretty much any disability but might have a critical illness that requires some financial help. So I hope that helps to understand critical illness insurance. It is a fairly straightforward product, quite popular in the market today, and you certainly do have to understand it to get through the life insurance course as well as any other financial planning courses. Thank you very much.